Good morning, viewers. It's Monday morning, April 7, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. A sharp rise in trade war intensity sent Wall Street spiraling on Friday, pushing the Nasdaq into a bear market, denoting a 20% decline from its peak. US stocks cratered on Friday, with the Dow Jones Industrial Average plunging more than 2,200 points after China stoked trade war fears and Fed Chair Jerome Powell warned of high inflation and slower growth stemming from tariffs. The Dow pulled back 5.5% to enter into correction territory. Meanwhile, the S&P 500 sank nearly 6% as the broad-based benchmark capped its worst week since 2020. The tech-heavy Nasdaq Composite dropped 5.8% to close in bear market territory. For the week, the S&P 500 fell 9.08%, the Nasdaq declined 10.02%, and the Dow fell 7.86%. The Russell 2000 Small Cap Index dropped 9.70%. The major averages added to Thursday's $2.5 trillion wipeout after China said it would impose additional tariffs of 34% on all US products from April 10, matching the extra 34% duties imposed by Trump on Wednesday. That ramped up investor worries that countries are more likely to retaliate than negotiate, leading to a protracted global trade war. The trade war has spurred the biggest market losses since the pandemic. The market wide toll from the 2-day tariff rout surged to a record $6.6 trillion. China's decision to apply a 34% levy to all imported goods from the US next Thursday after President Trump's tariffs go into effect rattled market in part because it further deflated hopes that a global settlement could be reached soon. Intensifying the standoff between the world's two biggest economies, Beijing also announced controls on exports of some rare earths, while Trump doubled down as well, vowing not to change course. China added 11 US bodies to the unreliable entity list, which allows Beijing to take punitive action against foreign entities, including firms linked to arms sales to democratically governed Taiwan, which China claims as part of its territory. Other impacted nations like Canada also readied retaliation in a mounting trade war after Trump raised US tariff barriers to the highest level in more than a century, leading to a plunge in world financial markets. Further hitting sentiment, Fed Chair Jerome Powell said the US economy was more likely to face a period of higher prices and weaker growth than seemed possible a few weeks ago because of larger than anticipated tariff hikes. Federal Reserve Chair Jerome Powell told a business journalist conference on Friday that tariffs were larger than expected and elevated the risk of both high inflation and slower growth. He said it was too soon to say what the proper rate path should be. The Fed can wait for more data to decide how monetary policy should respond, but it will focus on keeping inflation expectations anchored if Trump's tariffs spark more persistent price pressures, Powell said. He did not directly address the US stock sell off, but acknowledged that the uncertainty had paused business decisions. People are they just are kind of waiting for clarity, Powell said. I can't tell you when that will pass, but ultimately it will pass. Just before Powell spoke, Trump said in a Truth Social post that it was the perfect time for the Fed to cut interest rates. Cut interest rates, Jerome, and stop playing politics, Trump wrote. Even as Trump left the door open to making deals, he vowed new tariffs on drugs and microchips. Investors took little comfort from Trump's stated willingness to negotiate. Trump, posting on Truth Social on Friday, added to his fears by saying that his policies will never change and warning that China played it wrong. Trump remained unbowed, saying it is a great time to get rich and that China played it wrong. They panicked. To the many investors coming into the United States and investing massive amounts of money, my policies will never change. This is a great time to get rich, richer than ever before, Trump said in a social media post. Trump also said on Friday he was extending by 75 days a deadline for Chinese technology company ByteDance to sell the short video app TikTok or face a US ban. Trump said reciprocal tariffs are a response to barriers put on US goods, while administration officials said the tariffs would create manufacturing jobs at home and open up export markets abroad, although they cautioned it would take time to see results. Investors drew little solace from an unexpectedly strong jobs report. White House touted stronger than expected jobs data on Friday after a Labor Department report showed the US economy added far more jobs in March than predicted. The report showed the economy added 228,000 jobs in March, beating estimates, though the unemployment rate ticked up to 4.2%. But Trump's sweeping import tariffs could test the labor market's resilience in the months ahead amid sagging business confidence. Economists are warning that with tariffs as is, the risk of a US recession is rising. Investment bank JP Morgan estimated a 60% chance of the global economy entering a recession by year end, up from 40% previously. Traders have ramped up bets on interest rate cuts this year, figuring the Federal Reserve will have to shore up the economy. The Fed is expected to set its efforts to cool inflation aside to tackle the bigger risk of economic slowdown. Oil prices slid further, with benchmark US crude oil falling to about $62 a barrel, the lowest level since 2021, if they settle there. Investors rushed into treasuries on Friday, pushing 10-year yields well below 4% to 3.9%, nearing its lowest level since October. Bond yields fall as prices rise. The dollar, which fell sharply on Thursday, rebounded somewhat but remains near its weakest levels of the year. My take. The torrent of selling late this week shows investors coming to grips with the grim implication of the global tariff standoff. The levies announced on late Wednesday were deeper and more aggressive than the business world expected. Retaliation stands to intensify the economic effects of the policies, which stand to reduce consumer income and slow economic growth. Now, investors are bracing for more further conflicts, none of which is likely to improve the outlook for the global economy or corporate profits, the strongest driver of stock prices. This is significant and is unlikely to be over, hence the negative market reactions. Investors are afraid of a tit for tat trade war situation. The market turbulence is an adjustment, and in the long run, global businesses would adjust to this new environment as long as there is even a semblance of certainty. While it is acknowledged that markets are crashing, economies aren't. That's the wrap for today, my dear viewers. And if you got value from this, please do subscribe, like, and share this video as much as possible. You can contact me at st@st-money.com for any further information. I'll see you again tomorrow morning. In the meantime, happy investing, stay inspired, and remember, it is all about money.